All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, we're talking about why I'm not necessarily buying, I'm not necessarily selling my Yieldmax positions. And hopefully, if you guys can hear my voice, I haven't made a video in over 5 days, 6 days, because I actually lost my voice. And it's a little difficult for me to make a YouTube video if I don't have my voice. So I want to say it's good to be back, guys. My voice sounds atrocious right now, but you know what? It's the first day that I really got it back. And so I wanted to make a video for all 3,952 of you who did subscribe and the 5,000 people who watched my last video. Holy crap, my voice sounds like something I can't say on YouTube. But anyways, today we're going to talk about why I'm not necessarily selling and I'm not necessarily buying any more Yieldmax. And I think this is going to be true for the rest of kind of like my time. I say yes and no. The reason being, if I see an absolutely deal I cannot pass up in TSLY, for example, as it maybe hits below $10, way below $10, I might look to add a little bit more as I think Tesla might have a run up, but that would most likely be the only case. Because in terms of the Yieldmax, we've held Yieldmax for almost a full year. We've pretty much generated about $230 every single month now because we have been reinvesting and investing into the Yieldmax funds, which have crazy high yields. 37% doesn't even rival most yields. We're talking about 60% for TSLY and then 90% for SQY. And then we also have Coney, which I don't have up here, with about 150%, which we could probably see on here. But the thing is, we've been buying Yieldmax and it kind of has felt like a return of capital. And I'm not sure if anyone else has felt that as well, where it feels like you invest your money and they just kind of pay you back in dividends. And obviously the NAV erosion is definitely there for all the Yieldmax funds like TSLY, like SQY, as the dividends come out of this share price and then we receive that back. But the NAV erosion seems really real, and you could see here that even for TSLY, something like that, when we go to the max history, it really has been a straight down chart. And the thing is, when you're paying out 60, 70, 154% in dividends, that's all coming out of the share price. And so if your share price doesn't appreciate enough, if the underlying stock doesn't appreciate enough or fast enough, you cannot keep up in the current share price of the Yieldmax funds. And that is something that I think I'm really finding out right now. Now, I have invested in TSLY for probably about 8 or 9 months or so. So I've been through it. I do understand. I get the dividends every single month and I see the NAV erosion every single month. And you know what? Am I dissatisfied in my investment in TSLY? No, I'm not. It's been so much fun and I love receiving the dividends, and I still receive the dividends every single month. The only thing though is the decline in the share price is very steep. And it's a little discouraging when you are investing. Sure, you could reinvest at lower prices every single month, but why do I want to keep reinvesting when my money just keeps, my net worth in the stock just keeps depleting and coming out as a dividend? So that is kind of my whole basis for why I'm not necessarily buying anymore. I'm not necessarily going to be selling my stock. What I want to do is I want to simply hold and I want to simply receive this $230 every single month. And it all goes back to the beginning. Why did we buy Yieldmax in the first place? Why did we buy TSLY in the first place? Comment down below. Why did you buy TSLY, or why did you buy any of the Yieldmax in the first place? My first place was because I wanted to take this money and then reinvest my monthly income into some quality, like really quality dividend paying stocks, whether it be something like PepsiCo or whether it be something like Shell, for example. But that was the whole basis. Build up a large monthly income position from these high yield stocks in order to then buy me some amazing long-term stocks, which I will definitely be holding for probably forever. Now, I have obviously built up some crazy positions, not so much in Coney or SQY, even though we have small positions, but in TSLY and Clip, 100% we have, with almost probably about $3,000-$4,000 in those stocks alone. And they do pay the bulk of this $230. Now, I do want to continue to receive, obviously, this high income, because $230, when we take $230, for example, and we divide it by the share price of Shell, $61 every single month, we're able to buy 3.7 shares, rounded up to four shares of a long-term paying stock from something we just hold, something that just generates us more cash flow. And that was really my whole basis investing in these high yielding and high income stocks, or sorry, ETFs, as you guys love to put it, which they are. But that is why I will continue to hold my positions. I want to take the cash flow from these investments and I want to put them into more long-term plays. But it's been an interesting ride, you know what? And I'm sure you guys can all agree and all see kind of like the point in this. The reason is just that the dividends, with so much being taken out of the share price, it really erodes the share price. And I think that's safe to say. Obviously, if you invest in SQY, if you invest in Coney with the massive dividend yields coming out, one thing to keep in mind is obviously each Yieldmax fund is tied to an underlying. So if the underlying explodes and goes way up, then you're going to see a massive explosion in the share price, as we've seen in SQY. If the underlying stock goes down quite a bit, you're also going to see that in the Yieldmax version as well. And currently, TSLY Tesla has been kind of underperforming in my opinion. Sure, we've gone up a little bit over time, but we're kind of hanging at a lower barrier now, which is kind of also contributing to the fact that TSLY's share price is under $10. Now, I do think Tesla's going to go up, and that's also a reason why I'm not selling. I don't want to necessarily sell my Yieldmax positions just because, oh, the underlying stock is at a low. Why would I do that? That makes no sense. Why would I not at least want it to be at a high, and then I'd look to sell my Yieldmax positions? But I think Tesla's going to go up, so why would I sell TSLY? And hopefully, you know, we can receive some better dividends from TSLY as Tesla, the underlying stock, appreciates. And really, I'm just looking to ride them out to the end. I don't know what's going to happen with TSLY. It's going to be very interesting whether they do a reverse stock split, which I talked about on my channel, which obviously you guys did not like. But let's face the facts here. If TSLY goes down to under $5, for example, we are totally at risk of a reverse stock split just due to the fact that the share price is not going to get to zero. Yieldmax is not going to allow this stock to get to zero. What they're going to do is they're going to get it to about under 5, probably under 4, under 3, and then they're going to do some kind of a reverse stock split, because why would they take that to zero? It would make no sense. And then what they would do is they could potentially half your shares or something like that. It's going to be interesting to see what they do. So I'm definitely along for the ride. And if anyone is sold out, but they're still interested, then they could obviously follow our journey on our channel. You just got to subscribe. But this is kind of just the whole basis for these Yieldmax funds. It's just to generate income. And you know what? It kind of comes at the suffering of the share price. And so going forward, what I'd probably like to do with my money, I mentioned I might get into more long-term plays, but I'd like to find some high-yielding funds, like maybe SVOL. SVOL is a good fund that I might be looking into, which I'm going to actually put up right here, Simplified Volatility Premium ETF, because the share price relatively, it uptrends a little bit, but it still pays a pretty good like 15% dividend, something like that, 16% dividend, as you can see here. And so SVOL might be one of the ones that I might be looking to put $230 in to still generate some high income, but at the same time try to offset the capital depreciation loss that we've seen in a lot of the Yieldmax funds. So I'll continue to hold my Yieldmax funds. I'll continue to update you guys with all the dividend alerts and everything like that, but I'm not necessarily going to be looking to be investing any more money into Yieldmax, simply just holding and collecting those dividends as time rolls on. So I hope you guys did enjoy this video and got a perspective of why I'm going to do this. I know it's probably not what you guys want to hear, but it's something that I think is for the best. And I'm trying to, obviously I'm not a financial advisor or anything like that, but what I am trying to do is I'm trying to make the best moves for myself. And hopefully when you see that, then you obviously try to make the best moves for yourselves. And I don't think that the best moves for everyone is to copy what I do. Absolutely not. We all got to make our own decisions based on our own financial situations. But this is just what I'm doing, and I'm sharing exactly what I do with you guys, which I think is fair because I have a YouTube channel. So I hope you guys did enjoy this video. If you did, please do subscribe. We're up to 3,952 subscribers. Let's get that up to 4,000 subscribers. I want to say thank you guys for sticking with me because my voice is definitely trash. And you know what? Hopefully it doesn't sound too bad on this mic. I want to say thank you guys for sticking with us. Thank you for enjoying the videos. And you know what? I will see you guys in the next one.